Welcome, everybody. I'm Stewart Heath, CEO of Harvard Grace Capital. Privileged to be here with Charlie Wessel of Cordell Capital, who's sponsoring this particular webinar. We've worked together on several other properties in the past and are still partners in those. So I'm happy to be here with Charlie again, talking about the land title building in Birmingham, Alabama. So this is a building originally built in 1929. As you can see, it's more than 30,000 square feet. It is an office building in the heart of downtown Birmingham. It's primarily filled with lawyers, and the name tenant there, Land Title Company, has been an occupant in that building for over 40 years. Let's see. So I want to see if I can. Yeah, there we go. All right. Just for everybody's information, this is a transaction we actually closed in February. We raised a little over $1 million on this transaction. At that time, Harvard Grace Capital provided the balance of the equity. Most of you guys are probably aware there was a little bit of some market uncertainty back in the spring. A lot of investors didn't want to do much of anything. So we're bringing this back, but this building is owned, it's operated. We've removed a great deal of the risk at this point where it's not certain that we'll get it. It's not certain. We've removed all that uncertainty. We have our financing finalized. We're operating. A lot of our year one business plan objectives have already been met, and we're meeting the rest of those, and we'll get into those. So just so you know, we already own this building. It's already performing at plan or a little bit better. The one thing that's different between now and when we bought it is the Tax Act that was passed about 2 weeks ago. And so there will be 100% bonus depreciation available for this property. It was acquired after January the 19th of 2025. When we bought it, we thought we would just get 40% bonus depreciation, but we'll get 100% bonus depreciation this year. And the other upside to getting in now versus having committed in December or January is your money will go to work immediately rather than waiting for an actual close date. We are seeking approximately $600,000 of additional equity at this time, just to close out the round, and we'll get into more of the details as we go forward. Okay. There is a disclaimer. I'm sure Charlie and Mafi will send you out this full deck after it if you request that. So here are the investment highlights. We did close with an interest rate of 6.65%, which was still pretty good now. It was very strong 6 months ago, but we could have done a little bit better today at 6.5%. But 6.65 is the best we've seen in over 2 years. We're very pleased with that. The facility is 84.5% leased. There's one vacancy on the second floor, and it's primarily a professional tenant base. Mainly it's lawyers who need access to government agencies or the courthouses, which this building is close to the state and county level, and the federal courthouses in downtown Birmingham. We already mentioned the bonus depreciation. Our cash on cash returns are starting out at 6.5%. They will accelerate quickly. And we can talk about the numbers and our assumptions. We do have a 5-year business plan, and we think that the equity multiple will be about 1.8 or 2, which will turn out to be a very nice, strong return for everybody. Again, the summary, this is what at Harvard Grace we like to call a nice boring asset. It's stabilized, it's cash flow generating today. This is a professional office building. Our strategy is to buy it and hold it, operate it. If the opportunity presents itself, we'll refinance it, pull cash out tax-free, send it back to the investors. The sponsors of this are Cordell Capital and Harvard Grace Capital Corporation. The property manager is our subsidiary, Harvard Grace Corporation, which manages all the projects that we're involved in. Our projected hold period is 5 years. We are located in Birmingham, Alabama, and we have established a single asset LLC called Land Title Partners LLC to hold this asset. The investment particulars as far as the limited partner investors are, on your investment, you'll earn an 8% preferred return annual. The investor waterfall means how does the cash flow out? Well, 100% of your preferred return must be paid out first. Then 100% of your return of capital must be paid out. And then after that, the sponsors get kicked in for their 40%, and the investors continue with the lion's share of 60% after you've already gotten your investment and preferred return back. We do make distributions quarterly. So if you invested in July, our next investment would be in approximately October 15th. So we pay on calendar quarters. And so the date that your money, your investment is made, you begin to earn from that day forward through the end of that quarter. And so your first quarter is prorated. Our minimum investment is $50,000. We are taxed as a partnership. The entity is an LLC, so you will receive a K-1 annually with your pro rata share of earnings, depreciation, and other charges and tax attributes that come out through K-1s. Over a 5-year hold period, we're projecting an average annual 10.46 or 10.5 cash on cash return. That assumes no refis, that assumes no sales. That's just the cash on cash from operations of this building. Nice, strong cash flow. So again, our entity name is Land Title Partners, Inc. The address of the project is 620th Street North in Birmingham, Alabama. Professional asset type, professional office type of a asset class. We are 30,849 square feet, 8.5% occupied. We have 8 lawyers, financial, and other professionals. We've got engineers. We have got some tax accountants, and then the balance of them are attorneys. All of the lease types are a modified gross, which I can handle a question on that later. But a gross lease is where the landlord pays everything. A triple net is where the tenant pays everything. We're somewhere in between. Where we're paying, frankly, we lean towards the gross side on these leases, but there are some things that are billed back to the tenants on this. Let's talk about the area a little bit. The address, downtown Birmingham. Downtown, like many southern downtowns, has been gentrifying over the last 15 years or so. But downtown Birmingham is officially 3.2 square miles. There's 11,000 people that live in downtown Birmingham. We're very close to the Harbert Plaza, which is one of the biggest towers and one of the central points in downtown. We're also 1 block away from Lynn Park. We get a lot of foot traffic past the building because a lot of people like to spend time in Lynn Park. Very close to all the courthouses and the downtown banks. There is a new residential tower going up 2 blocks away. And so there is shopping and restaurants and all those kind of things that you didn't used to see in downtowns, 25 years ago, but have been coming back to southern downtowns like Nashville, Atlanta, things like that. And Birmingham's no different from that. It's frankly a very nice place to be and hang out and work. Also access to some local hotels. Our strategy, buy and hold, rent the unoccupied space. We're going to operate this asset for cash flow for 5 years. When the market conditions are right, if the market conditions become right, we will refinance the property and return that capital. At their opportune time, we'll sell it for maximum to maximize capital gains. Right now, we don't really know when that would be. We're in a bit of a weird time as far, the Fed has lowered interest rates, but the long-term rates have not come down. They really haven't moved at all in over a year, even though the Fed lowered rates 3 times. The president's doing an awful lot of lip service about that, but I, for one, don't believe the Fed has a lot of impact on long-term rates. So we don't know when the opportune time will be. But the upside is this building is a nice, stabilized, double-digit cash flowing asset. Why Birmingham? It's called the Magic City, which is a name that goes back to the Civil War. I won't bore y'all with that right now, but Birmingham is very attractive today. Its cost of living is 91% of the national average. So you can get all the conveniences of a modern city, but with a very modest cost of living. It is sort of a healthcare center and an education center. There's a lot of universities in Birmingham and a lot of healthcare companies, as well as large regional hospitals there. Downtown Birmingham, going back to that 3.2 square miles, 63,000 people work down there, 11,000 residents, and 7,000 and increasing residential units are in the downtown area. It's really becoming a live and work type area. So we acquired this for $2,925,000. We closed the purchase on February the 28th of this year. There's equity in it of $1,570,000. And as I said, Harvard Grace funded that at the closing, but we're just offering those back to the market at the same unit price to round that out. Our mortgage was a 65% loan to value at just a little over $1.9 million. Interest rate is 6.65, amortizing over 25 years. The bank loved it because we had a 1.66 times debt service coverage going into this deal. Here's our numbers. This is the important line in here. We will have a 6.5% cash on cash return this year. It'll go up about 3% and will continue to go up. This model has no refinances, and as you can see, it just continues to go up. We start to assume some vacancy in the out years, even though we've already got some built in currently, because we're at 15% vacant now. So we feel like these numbers are fairly conservative. So this is where the building is. There's Lynn Park. This is the Regions Plaza, and just a little bit down 20th Street, down this way, is the Harbor Plaza. You've got a courthouse here and here, and just other good, large, highly trafficked downtown towers and things like that. If any of you guys are golfers and you use the Shipt service to send your clubs, they have a tower just 2 blocks away in the Shipt Tower in downtown Birmingham. Charlie, since you're here now, you want to talk about yourself? Or you want me to talk about you? Never know what I might say about you. So
Yeah, I'm here. It's yeah, I've been texting with the owner.
okay. So as I mentioned before, Charlie and I have partnered on several deals. He's been in the real estate and capital raising business for a long time, and he's a good partner to have. I'll let you guys. He says he's got primarily been an investor in multifamily. He's got over 1,000 units under management, over 163 million in assets under management. There's a little bit about me. I'm a CPA. We started the syndication company after 20 years in real estate, not syndicating. We started this because we wanted to get into larger, more syndicated deals. And we started that in 2021. We have 42 million of assets under management just since that time, and they're all in the boring, stabilized, cash flowing classes. Our focus area is anywhere from basically Nashville to Birmingham, which we call the Tennessee Valley. And we live here, which is why we also provide the management for these. Harvard Grace has a board. We're happy to tell you more about these guys. And that's really the deal. Here are some pictures of the building itself. It's been very nicely appointed. This is the lobby as you come in from the street. The name, tenant, land title is just, they're off there. Then there's other attorneys. It is a Gothic style. I can tell you this: everybody in Birmingham knows where this building is. It is very well known, and it is very well located. It's been somewhat mismanaged in years past, but not too much so. We've got some beautification projects, but we don't have any real hard things that have to be done that will save the building. So, and at this point, we've already taken over management and gotten the tenants used to a new management team, and we're just ready to move forward and rock and roll. These are the very old schematics of the floor. First floor, second floor, third floor, fourth floor, and there's another floor, the basement, which the land title company also rents, and I don't have a schematic for that one. And we're in the process of getting a scan done for that. So it's actually 5 floors. It backs, it sits catty corner on the corner, and on this side and this side, it attaches to other buildings. So really the only exterior pieces that we have to worry about it is right here where it faces the intersection. Interesting. So the last owner was a private equity firm out of Missouri, and they came into Birmingham and bought several historic type office buildings in 2019. Not the best time in the world to get into the office world. And before we ever found out about it, they'd already sold 4 of the 5 in a package deal to another investor. They could not come to terms on this building. And so then we found it. We look at the cash flow, which is our primary driver. And then we made a deal on it and put it under contract December 1st of last year. So we actually bought it at I think an 8.75% cap rate going in, which is a pretty good cap rate even for an office building these days. But they were pretty much ready to just get out of the whole Birmingham market. Birmingham didn't treat them very well. If you are, depending on what your own investment goals are, if you are looking for recurring cash flow, with no frills, with no development risk, no interest rate risk, you might want to seriously consider this one. The tax benefits that come along with this will shelter any cash flow income that you get out of this, for the next 3 or 4 years, which greatly enhances your return. And depending upon your own particular tax situation, the 100% bonus depreciation could come through and offset other types of income on your personal return too. That'd be something to discuss with your tax advisors. If you can qualify as a real estate professional, then you can use bonus depreciation to offset anything, any kind of income. But if not, you can absolutely use it to offset any other kinds of passive income, not just from this particular investment, but from other passive investments you may have done that's throwing off income. So that's the tax benefits are a real benefit, plus the strong cash flow.
Yeah. So anyways, guys, the thing that really turns me on about this project is location.
I mean, it's a building full of different law offices, and it's right across the street from the Birmingham County Courthouse. You know, they walk across the street, they're, at the courthouse. So, that, and the fact that me and Stewart have been doing deals for a while, and, we don't get into every single deal that he does, but when we do, we're cherry picking them, and not that all of them aren't good that he does, but we just have a, certain amount of bandwidth for opportunities that we put out to our investors. Anyway, sorry about my internet not being able to present today, guys, but we appreciate y'all showing up. Thank you guys so much.
All right. Take care, guys.
Bye-bye.